You're watching Wall Street Confidential on TheStreet.com TV. I'm Farnoosh Torabi. Welcome, Jim Cramer, co-founder of TheStreet.com. Hi, Jim. You recently wrote a column on how to buy it back like the brokers do.
Right.
You shouldn't give up on brokers right now because guess what? The leaders are buying back their own shares.
Right. Well, look, it's a natural propensity to take a stock that's $240 like Goldman, $230, and just sell it, raise cash with it. And it's also part of the S&P, and it trades wildly as part of the S&P, as does Exxon, by the way. It's natural to say, okay, Lehman Brothers must be peaking because the same thing that's happening at Bear could be happening at Lehman because they have hedge funds like this. It's natural to think that Bear is a second-rate firm now because it let this hedge fund happen. It's a $600 million hedge fund. It's almost nothing. Lehman has a $60 billion balance sheet. Goldman has a $100 billion balance sheet. Now, when I say that they have that much in play, every time that these companies report, there's always a line about buyback and what they bought. And it's always astonishing. Goldman bought a huge amount of stock back in the last quarter, $200. You say, geez, were they lucky? How could they have bought it back at 200? No, there were a series of days where Goldman was traded between 190 and 200, and people panicked and they kept selling. It turns out they were selling into Goldman's buyback. Yeah. And Goldman is a better trader than everyone who's watching this video. Better than everyone. I got taught at Goldman, and that they were a superior trading outfit. They've always been. They've been the best equity trader ever. That's the tradition. When they're buying, you can't sell with them. You just can't. Let me use an example from TheStreet.com. I bought 500,000 shares between 1 and 2. I had tremendous knowledge of the future of the company, not of the quarter or anything like that, but of the future. Goldman has tremendous knowledge of the future, of what they think is the value of the company versus a Blackstone or versus what its multiple should be. How Wells Fargo is a 14 multiple and they have a 9 multiple. And I think the most important thing is you want finally to, when they report their next quarter, say, I bought with Goldman. I didn't sell into Goldman. I bought with Lehman. I didn't sell into Lehman. These places just reported. They told you that things were getting better by the month, including Bear. So I'm trying to get it into people's heads that you should not sell into a really good buyback. The other great buybacks besides, Goldman's a fabulous buyback. Exxon has a fabulous buyback. And yet yesterday there were the future sellers, Exxon overweighted in the S&P. They were banging it down. The stock was down 3, and there were no buyers at all. I happened to talk to the specialist who was on Exxon. He said there was not a single buyer to be found. And the company can't buy in the last half hour because the specialists aren't allowed to mark stocks up. But just another opportunity. Don't sell into the buybacks. It's just a really bad percentage play.
Seems like just follow the leader.
Well, when they're doing buybacks, yes. I mean, don't be the sucker who says, "Oh my God, I sold into Goldman at 200." And yet, but I remember when Goldman was at 200, I only encountered major sellers.
All right, Jim Cramer, don't sell off on financials right now.
Not when they're buying back.
Absolutely not. All right, Wall Street Confidential on TheStreet.com TV. Stay with us.